Trades, and today we're gonna talk about Iron Condor monthly income strategy. How you can leverage Iron Condor to make money in the sideways market, like right now, or it can be like bullish or bearish as well. But basically, I'm gonna kind of show you how to set up Iron Condor and go about like what is Iron Condor as well. So also, if you have not like and subscribe, please don't forget to like and subscribe. uh, it just helps me to make more video. And also, if you have any questions or you want me to cover any other topic, let me know and I will cover those topics. So let's get it started. So this is an examples, and I took a trade on Facebook today as well, and I'm gonna kind of show you. So Iron Condor is basically uh, put credit spread, right? So you have a call credit spread and put credit spread. If both are combined, it's called Iron Condor. So in Iron Condor, you have a four legs. A leg is basically when you buy a call or sell a call, whatever you do, that's a one leg. So basically, you have four legs. You have four contract. So today, now Facebook was basically Facebook opened pretty much up 62 and went up to 69 and went down and kind of went up, which is really great for Iron Condor. So um, so how do you buy Iron Condor? It's I'm gonna show in Robinhood too. A lot of other platform make it easy. Just you can choose the option from the menu Iron Condor. If you want me to kind of cover a specific platform, I can make video on that later on. But a lot of a lot of my followers are using Robinhood, so that's why I usually use Robinhood to show. So this is Facebook, right? So few things to note in Iron Condor, right? You wanna you wanna buy Iron Condor when volatility is really high and you expect to go down. That way, when the volatility just goes down, you made money already and you can get out. And the other thing is like whatever strategy is, right, a lot of people are stuck with the expiration date for the max profit. That's kind of bad mindset, and a lot of people are looking at the expirations, a break even price and whatnot. So don't look at don't give again, I'm not saying don't look at those, but don't get fixated with those numbers. Just think about it, right? Like you can always close your options, any kind of options, pretty much before it doesn't have to be expiration. So you can always, so basically I got in, maybe tomorrow I'm up 20% and 30%, I can just close it out and done with it, right? So the time you are in a trade, it's a risk, right? So you are in a risk, it can always go south, it may not work what you expected. So it's better to get out early than it's better to be, safe and sorry. So let's get it started. So and a few things I will choose. So please avoid earnings for Iron Condor. Earnings can have big swings, and also if there's any kind of events, not a great. That's why one of the things is like Iron Condor is really best for indexes like SPY. QQQ can swing a little bit, but SPY, IWM, and SPX if you have a lot of money, but you can use those ticker. So it consists of four legs. So here you can see that you'll have two put leg and two call leg, and both are basically credit spread, and you get a net credit, right? And you basically, for this one, I got a credit around 575, right? These are five contracts, so I got like 115 credit for each contract. I should be profitable. It's just after hours like negative, but negative 4%. I should be profitable because it's kind of hanging around that, so it will probably reflect tomorrow. So I opened this position just to show you guys, and also I kind of feel like it's gonna be around this price range. So in nutshell, so what this is basically, if the Facebook stock, which is at 261, and if it remains anywhere between 245 and 280, so if the stock is between 245 and 280 by end of this week, I make money. It can be go sideways like 60, 70, then come back 60 or even 50, then go to 55, doesn't matter. As long as it's within that price, I'll make money. And I do not have to wait till expiration. I can close anytime I want. So pretty much that's about it. So you have basically, what you are doing is that you are buying a call credit spread and also buying a put credit spread. So that makes it four legs, right? So it can go either one way, not both ways. So you will win one way, but you can. And also, what is the max loss, right? Max loss is always the width of the spread, right? Width of the spread, not the four spread, whatever the put. Again, you can, if you have your spread like your call width. So the suggestion general idea is like you get the same difference width. Like here it's 5, right? 85 80, that's 5, and 45 45. You can actually make it 5 and 10 here too, but I just do this. And your max risk will be whatever the width of the spread, so not this whole width, but whatever is call width or put width, whatever it is. And if you have different width, then it would be the larger one, right? So it can go in that direction and you lose. So you start losing money if it goes above 280, or if it goes below 245. So basically anything below 245 or above 280, you will start losing. I usually, if I'm losing like 20% or something, I usually close it out. It's kind of not working, so I do not let it go till there. So because you are trying to, here I'm trying to make 25%, right? So if you look at max profit 115, pretty much right about 25%. So if I'm doing 2025, I will get out. So I don't want to lose more than what I got credit for. So that's how I do it. You can. And the other thing is I always choose like whatever the lower your break even point, right? 245 puts, right? I try to choose the delta to be around 16. Looks like 16 tomorrow. I hope it's gonna be, theta is 56. That's the, so delta around 10 to 15, a little higher. This one I usually try to get around 15, and I suggest, so basically lower the delta, lower your risk, right? Lower of risk, lower, higher chance of you winning. So but I usually target around 10 to 15. I don't know, it's a little bit higher than my preference, but you can always choose. But yeah, higher the delta, you make more money, but your chances of winning kind of goes down. So now we're gonna make it iron condor, right? So let's buy iron condor on Facebook itself, right? So you can do, so again, so you are buying, you have a four leg, right? And you are buying call and put credit spread, not the debit, just the opposite, right? So first I'm gonna go call credit spread, right? To call, I'm gonna, as I said, I'm gonna go with yeah, about 9 7 delta. This is like exactly 12. Yeah, that's my preference, right? So here I can select like, so first you are doing call credit spread. In a call credit spread, just opposite of debit spread. What do? You sell call lower leg. So I'm selling this, right? You sell call lower leg and you buy call higher leg. So 80, let's select 10 just for the heck of it. 80, right? So I get $62 in credit by doing this. Buy call 80, sell call 90. That's it. That's a two side in the call. Now you do the put. Now you go in the put. So you go down. So buy put, same thing. Uh, let's look at the delta. I'm gonna do delta 10 exactly. So what I'm doing is so basically you're selling higher, right? Sell put, you're selling this 40 to make more money, and you're buying put lower, so maybe 30, right? So here 30, so that's your total credit. Here in this case I'm getting credit of $128, right? So I'm getting net credit of 128. So what's my max risk? My max risk is width of the spread, right? So basically 240, 230, that's 10, 290, 280, that's 10. So that's $1,000 minus I got credit for 128. So net I could lose is about 875, whatever it is, right? So I don't know. It was iron condor why it became customs, but I guess you got the idea, right? So that's all. Your total credit is 128. So as long as the stock is between 240 and 280, as long as the Facebook is between 240 and 280, you get this credit. You do need $1,000 collateral for this. Robinhood puts $1,000 collateral because that's your max risk. So max is a little less, but Robinhood puts whatever the difference is for the collateral. Some other platform does not. They actually calculate and put less collateral. If you are in margin, they will evaluate what's the margin needed. So depends upon the platform to platform, and you can contact your platform. But here in this case, it's 128 credit, and if you look at that, it's almost 10-12% in a week. That's a great gain, right? So if you are really conservative, you can literally target like a 1-2%. So this is still yeah, that's a 10%. So 2%, how much you have to go, right? Think about it. 2%, you can actually do really play with those number, and you can actually get ahead of this. For example, let's look at what's gonna be 2%. So if you are targeting 2%, you can actually 330. Oh, I was like, why it's that high? Cause that was a put. So 2%, let's look at maybe 95. So 2% will be $20, right? Yeah, 100, 2,000, $20. So $20 we'll targeting maybe $10 here in this side. So we can do 90. That's $15. So we don't even need that. Then we can do 95, 300. That's 5. Yeah, let's do 90. So you are doing like sell call 290, buy call 295. That's $13, right? And as long as Facebook is between less than 290, you win this side. And similarly, you can make that's your total credit. Similarly, you can do buy put. $25, $30. You can do $25, $30. So buy put this and sell put 30, and you make $26, right? That's your total credit. That's higher than Condor. So that's a little bit above 2%, but pretty conservative. So as long as the stock is between 225 and 290, you will win this one, right? 225, 290, you will win. Also, you can close this. For example, if it's like its value is $10, you already made 16, you can always close out. That's it. Pretty straightforward. If you have any question or comment, let me know. Comment below. Other than that, have a great day, and don't forget to like and subscribe. Thank you.